one that's in profit right now. The market's closed. It's opening tomorrow. I have one that's in profit, and then I have another one that I am in drawdown right now because, as you can see, it came up past my entry. But look, my stop loss literally for this one was right here. But you see, we didn't hit it yet. I didn't expect it to pass this area because I was so dialed into this. As I'm like, okay, if this does push up, because we are in this range, like I don't expect it. I put my little fib right here. I'm like, I don't expect it to pass TP2. So that's why I put my stop loss right here. And this is just an example. Like I said, I had this trend line right here based off, like, say if your trend line got broken and retested, but you're in a consolidation area, even though it broke and retested, it still has the possibility of pushing up. And this is like a prime example of that. So you just have to be mindful that that's something that can happen too when you are trading and not freak out when you see that you're in the red. Does that make sense? And to be honest, even with this like trade, I'm gonna see if the market, what happens if the market opens, like if it starts to have like a lot of momentum pushing up. I'm also going to move my, I'm not gonna get out my trade. I'm just gonna move my stop loss higher because I just don't see it I don't see it passing this main high right here because we have all this information to the left letting us know that we're about to fall. It's just a waiting game. So let's see, you didn't finish it. What I want you to do is, like, when you're doing your top down analysis, I want you to put what you think is going to happen next.
Okay.
So then I want you to write out, okay, I have this, these are my confirmations that this is about to happen. So I'm waiting for this to happen. I'm looking for this to happen before I enter here and then get out right here.
So should my entry points be found on the 1 hour time frame or the 30 minute?
30 minutes.
Okay.
You remember how last week we were talking about the dollar? And I was talking about how we saw all this confirmation for the dollar to be going up. So I still see the same thing. Like we can see that this is a lot of divergence right here with all this going up, and then you can see that was going down, it's starting to go up. We broke past the high a little bit, not fully. It's kind of a little even right now. So this is going hand in hand with what the currencies are doing. It's pretty much like in this range right now, consolidation range. But this still doesn't mean that what is happening on the left is telling us that we're wrong. It's just the same thing as the currency is just being patient. That this is eventually going to, like, it can, I don't know, consolidate some more, but it's eventually going to get to more. Which is like the opposite of what we're looking for on here. We're seeing that consolidation to continue down for GU and EU. There we go. Oh yeah, gold, the same thing. I see gold going down too because we have this high push. I at least see it coming down to this blue zone. I'm just not in the trade right now because I'm already trading two pairs. So this is kind of in there. And remember, I said too, gold and the dollar don't do the same thing. They can do the opposite. But so based off me saying that, there was like this whole post about Trump talking about how there could possibly be a recession in the future. So in your course, I did drop a cheat sheet. This is how it looks. If you go in the course under fundamentals, you're going to see that you're going to be able to download it. So there's this website called Forex Factor. So on Forex Factor is telling us what's happening in the economy when it comes to the interest rates, unemployment, inflation, all that. This is how the website looks like. On my cheat sheet, I basically give you like the main things that we look at. So for example, CPI is right here. So when the CPI comes out, the CPI is a way to measure how much things cost. So it's like a report card for prices, also known as inflation. So we all know when inflation means prices increase, right? When there's inflation. So, and when it comes to the market, when CPI, so every single month, numbers come out for these different things that you see on this cheat sheet. So this past few days, we had a few things come out, but I'm just saying one for example. We had CPI come out. So when it increases, it makes the US dollar go up. When it decreases, it makes the US dollar go down. So on here, you can see that the core CPI came out and it came out negative. You can see it's in the red right here. We look at everything that we look at these red folders, but when we look at the red folders, we look at the core, whatever says the core. And so even though this came out negative, meaning the US dollar goes down, that was just a short little pullback. I'm not sure when exactly happened. What day was that? 12? Yeah, so it was right here because it came out early morning. So you can see like it started shooting down. But those are like pullbacks. But what makes the major shift happen is interest rates. We all know what interest rates are, right? So interest rates are being announced, I think next week, Wednesday. Yes, yes. March 19th. You can see right here, federal funds rate. That's interest rates. So, with the interest rates, okay, so when it comes to interest rates, I actually have something else that explains this better. So, just to sum it up in short, when interest rates are high, it makes the US dollar goes up. I know it sounds very weird. Okay, what? Why? If interest is so high, how does that make the dollar better? So it makes the dollar better because people who are not inside of the US, when they see our rates increase, they invest their money into the dollar because they're collecting interest on it. So when they're pulling out, they get more money out of it. Does that make sense? So that's why it makes the dollar go up. When you see interest rates get cut, the US dollar goes down because people pull their money out because they don't trust the US dollar. It's like not valuable. And that makes the US dollar go down. And then that's when they put their money into other things like gold, for instance. Um, on top of this too, they were saying, so when Trump made the announcement about a possible recession coming out, a lot of people panicked and they pulled out of the stock market. So that's why I said it was like $7 trillion that was lost in the market because people don't want to lose more money in the future. You know, things come crashing down. So they pulled all that out. When stuff like that happens, when you see negative things happening, being said in the market, and this is looking at the bigger picture. We're not talking about looking at the 15-minute, 30-minute. We're talking about looking at those higher time frame structures, 1 hour and 4 hour. This is why knowing this is going to show you what overall direction is going to end up happening. So when it comes to a recession coming, a lot of fear in the market, the people run to gold. Gold is a safe haven, and the dollar is a safe haven. So based off those things being talked about, hold on 1 second. I want to pull up something else. I had it noted somewhere. Let me see. Did I email it to myself? I want to pull this up to break this down further. But while I pull this up, do you guys have questions on that so far? I literally, where is in my Google Docs? I literally just saved this. Hold on 1 second. Oh, cool. I'm gonna reference what the Trump announcement said. Because when it comes to what people say, like the president being in high power, it does matter in the market. Because you gotta think about this too, you guys. Like everybody, the market is being traded by people, like real people. So people have emotion. So whatever is said in the public, people are going to react to it. So okay, let me pull this up. Okay, well, let me just pull it up and I'm reading along the way. I'm not gonna go into details of everything. Okay, so you know how I was talking about how um he basically he declined ruling out the recession. You know how there's been back and forth if there's gonna be a recession or not. So he basically just said like, he's not saying that there isn't gonna be one. So um like I just said, since he suggested that it might be coming, this made the market uncertain because they thrive on confidence and stability. And so since that happened, like I said, they took a hit. So in the short term, straight for the dollar, it's flight to safety. So when the market crashes, a lot of people, like I said, pull their money out of the stocks and they put it into the dollar because right now it's like one of the safest assets in the world. So it's considered like one of the reserve currencies. So when fear rises, people shift money into treasury bonds. You guys don't have to like know all the details of all that stuff right now, but just know it's the dollar. So the long term, if the recession does hit, then that means that the feds will cut interest rates to stimulate the economy. When they cut interest rates, that just means more people are going to be spending money because it's not as hot. A lot of people are going to be buying homes. It's going to be a lot of money spent. So, like I just talked about, when the lower interest rates happen, it's going to make the dollar weaker. And so that's going to have investors looking into the returns of other currencies. So then that's when you'll be buying the euro against the US dollar and GBP against the US dollar. Okay, does that make sense? Okay, so let me see what else. So right here, this is where we're at right now in the economy. So in the short term, so I like when I say short term, I want you guys to think of like 15, 30 minute, possibly like a 1 hour. Right now, the dollar is strengthening due to it being a safety. Right now. You saw that was just announced. So people went to it, so we see it's going up right now. But in the long term, if the feds do decide to cut rates, you see every single month they announce if they're cutting or if they're raising it. So if they're cutting it, then that means that it's going to make the US dollar go down. It's going to make it weaken. If they increase it, then it's going to go up. So whichever they do, you're going to do the opposite for those other pairs. Okay, so so right now the dollar is up, but like I said, if it does hit or we get other signs that it is, it's gonna start going down. Okay. I pretty much just talked about this. Like if it goes up, then that means the other pairs go up and vice versa. When it comes to gold, anytime there's any type of uncertainty in the market, people go to gold when things are shaky because that's just a safe haven. Um, so short term, the gold might fall as US dollar strengthens. That's kind of like what we're seeing right now. This is going up, and we're looking at the gold to fall short term, and it lines up too. You're gonna notice too that news always lines up with technical. So even just seeing like, it could be falling as the US dollar strengthens. I see it coming down here because we have RSI, TP2 hit, we have a zone that was broken. So it's like I just see it falling. It just lines up with the news. But this is just helping like give you boost, especially like for the longer time. Like if you do, it's like one thing too you can do as trading, you can have like your short term sales or buys or whatever that you get in on those 30 minutes. And you can also play one too to hold. So when it comes to like how to trade this, what we were just talking about. Right now we're looking at the short term trade. So when it comes to, we've been looking at GU and EU a lot. So right now we're just looking for the opportunities on those pair right now due to what the dollar is doing. So when it says look for short opportunities, that's basically just saying look for sales. That's because literally this is what I wrote out right here is based off news. It's not even based off technicals. But we're seeing that it's lining up still with the technicals. So based on everything that's going on right now, like it's looking for short sales on those pairs. So looking for those to go down, possible dip on gold, long term. We can be looking for those other pairs to go up. And if fear of recession goes, if inflation increases, then we're gonna see you can buy and hold gold longer because I can just say when people are in uncertainty, they go to gold for sure. I pretty much explained like when certain things are announced, you can see quick momentum too on the shorter time frame. That's why when you are in a sell, you do want to give your stop loss room, especially when news comes out. Because if you have your stop loss close to where you're entering, it can like spike up and then go in your direction. So you want to have more room so that it doesn't hit your stop loss. So with the interest rates coming out, if the Fed hints at rates cuts or the market with the recession, so you can look for GU and EU to possibly reverse on those higher time frames. And then gold to follow in a similar pattern. We're not going to worry about the daily, but if the Fed start cutting the range, you can look for GU and EU to establish an uptrend on that daily. You know how RU had that main stress that you were looking at. So this is everything. We're gonna really see like the bigger picture of where everything is going when the interest rates get announced next week. So to be honest too, and this is why it's important too to like know what news is about to happen. Because sometimes too, since news is coming out Wednesday, especially interest rates, you can see the market doing this for 3 days straight. Because everybody's just waiting for what's about to happen. And then when that news jump, that shoot, it's gonna spike to the moon or spike down, whichever. It's gonna spike because everybody's just waiting to see like what's about to happen. Does that make sense? I'm gonna send this to you guys too. You guys don't have to be super dialed in on the news right now. The first important thing is just getting down the technicals. All this extra stuff will come. But I just wanted to share with you since I saw that was announced that like all that stuff does play a factor to why this is moving the way it is. But like I said, these are all people in the market. We're all humans doing the same thing. But it's what's happening in the economy that actually makes the overall bigger picture of what direction we're going. That makes sense to everybody? Even right here too, I know I did this little ghost pattern. I'm not even predicting it to break past this blue trend line. Remember, you never want to say it's gonna break past it. You don't, because you never know. You have to see what happens when it gets to that point. We're gonna go over this though tomorrow. Tomorrow's call.